Hey, it's Anita, and this is the Anita Posh Show. Hello, everybody, and welcome to another episode of the Anita Posh Show, where it is my pleasure to keep you up to date with topics around Bitcoin on a global stage and the local impact it has on people like you and me. My guest today is Shermin Voshmgir. Shermin is the author of the book Token Economy. I have it here. And she's also the founder of BlockchainHub Berlin and the Token Kitchen. And as always, you can listen to this episode in your favorite podcast player, or you can watch it on YouTube. Please hit the subscribe button now to be informed about new episodes that are coming up. And now, a short word from my sponsors, and then on to the show. Enjoy. Many people worry about the right storage for their Bitcoin. And yes, holding them isn't always easy. The safest way is offline, physically. That's why Coinfinity developed the Card Wallet, the professional and easy solution. Order it now at cardwallet.com/Anita and get 20% off. Do you want to stay up to date with the things that happen in Bitcoin from my point of view? Then subscribe to Anita's Weekly, my newsletter with articles, videos, quotes, short tips on how to use Bitcoin and all that for free. Subscribe to Anita's Weekly at anita.link/weekly. Hello, Shermin. Welcome to my podcast. I'm glad you're back.
Yes, hi. Thanks for inviting me.
It's the second time that you're on. The first time, I think, was in November, October 2018 or something like that. And yes. I was very glad, and I'm back again, glad to have you on, because you were the one you brought me into Bitcoin in a way, because I was listening to your talk in 2017. And then I realized, wow, that's it. That's what I'm interested in. And you did such a good job also in explaining the basics, what's a blockchain and what can Web 3.0 and the decentralized web do for humanity, basically. So you had also this focus on the social impact.
So I'm very glad to hear. I didn't know back then that my talk was your gateway drug to this world. So this is really good to hear. Yes.
Yes. So, but my listeners don't know you, so please introduce yourself.
My name is Shermin. I started the Blockchain Hub in 2015 in Berlin, back then there was little information on the internet about Bitcoin and blockchain for laymen, for people outside crypto space or outside the tech space. And I created this educational platform around blockchain, Web3, and potential, not only the technology, but also its applications. And then a few years ago, I got the opportunity to start a research institute in Vienna at the Vienna University of Economics and the Research Institute for Crypto Economics. We did interdisciplinary research on the technology and its applications. And I wrote the book Token Economy 2 years ago. It's been
this one.
That's true. This is the first edition. I think I sent this to you. Second edition, amended edition with its additional chapters came out last year. And I'm very, and I put the book online 2 months ago because a lot of people couldn't buy it or afford to buy it in certain countries. So I put it on GitHub for free, and it's now being translated by voluntaries into 9 different languages. So that's quite amazing. I was very surprised by the amount of people and enthusiasm to translate this book. And in this book, I describe the Web3 fundamentals, starting Bitcoin, blockchain, but also other technologies in the decentralized web, smart contracts, DAOs. But then I focus on tokens as the kind of killer application of this Web3. And the first token was Bitcoin, but there are so many other tokens we can create with blockchain networks. And I'm sorry, there is some noise in my background.
I didn't. It's okay.
Yeah. Okay. Yes. So currently, apart from writing my next book, which will focus on tokenized use cases of what I call purpose-driven tokens that steer networks such as Bitcoin, but also that you can use to incentivize CO2 emission reduction. So I'm focusing on the specific kind of token engineering that focuses on the economic incentive design, the mechanism design of tokens, but not only of steering networks like blockchain networks, but other kind of DAOs with different purposes. These could be educational purposes, sustainability purposes, etc. So this is what I'm doing now, and my company is called Token Kitchen, or it's a research institute and applied. We do research projects on token economics, and we also do a lot of education around this topic.
Okay, great. So now you said a lot of terms that I think many people don't know. Maybe we can start with explaining the basics, because you just said Bitcoin is also a token. Can you explain the basic differences? So what is a token and why is Bitcoin also a token?
I don't know why Bitcoin was the first token.
Yeah.
So most people use the word in the mainstream media. People use the word cryptocurrency. I don't specifically like this word because it limits the possibilities of the Web3 or of blockchain networks to one aspect of what a token can represent, right? And a token can represent a currency, but also many other things. So for those people who are native English speakers, a token is not a new word, right? So tokens in the English language could represent any type of asset token, but also existing computing for managing access rights. Tokens have been used to incentivize and reward actions. If we think of kind of reward bonus points and reward miles in aviation, they're like coupons or tokens to incentivize consumption of specific services, goods and services. So you get these tokens if you do something in the system or in a network. If you fly with a certain airlines, you get airline tokens, and they're called bonus points, but they're tokens, right? Tokens were also or have been used for decades, if not longer, to incentivize to kind of in behavioral sciences, in psychology, to incentivize behavioral change. For example, in the 60s, there were experiments of incentivizing psychiatric patients to modify their behavior, and they would get like kind of tokens that they could use in the hospital for certain, privileged services in the hospital, like better food or TV room access, etc. And so tokens are not a new thing. They're used in casinos, etc. The jetons. For using the public transport. What the Web3, what blockchain networks allow us to do, and it all started with Bitcoin, was to have a digital representation. It's kind of for managing all these things. So a cryptographic token or a Web3 token is basically a rights management tool. right? And it's collectively that token, the management of all the tokens, whether it's Bitcoin tokens or Ethereum tokens or specific DeFi tokens, or even identity or credential tokens. These tokens are collectively managed by public infrastructure, such as a blockchain network or other distributed ledger. It could be the Bitcoin network or the Ethereum network, where we all collectively manage of who owns which tokens and when, and who sent which tokens to whom, right? We manage that together, but the application is the token. These tokens can represent something that is very similar to money, like Bitcoin or Ethereum, a kind of an asset that is fungible, that where each kind of unit of a Bitcoin equals another unit of Bitcoin. That's a very important property of money. So we can use it as a medium of exchange, but tokens can also be used to represent many other things. And in the first maybe 10 years of crypto or 5 years of crypto, it was all about cryptocurrencies sending, or with Bitcoin, it was really to create a peer-to-peer electronic cash, right? That was the aim, to create electronic money that is reliable, that we can use without banks. But very soon, actually, it didn't take long until people said, what if we could represent any type of asset with you piggybacking a Bitcoin token? And then we had like initiatives like Colored Coins or Mastercoin. They try to use the Bitcoin infrastructure and the Bitcoin token and give more functionalities to the tokens, add properties to that token, so that a Bitcoin token could represent, for example, a commodity, or maybe a piece of real estate, etc. So that was back in maybe 2013, 12, 13, 14, when Colored Coins and Mastercoin tried to create other more other tokens with more unique properties, or things that were different to electronic cash, to manage those things with a public infrastructure. And it was actually, from what I understand, Vitalik Buterin, who was also kind of engaged in some of these projects, from what I understand. And he had the idea, he came up with an alternative idea to not use the Bitcoin blockchain or the Bitcoin network, but to create a kind of more flexible infrastructure that allows you to create any type of token with a simple application, with a simple smart contract that can have very easily be programmable to have a range of different properties. And maybe this is also one of the reasons, because Ethereum became very popular, and it really became, with the ERC token standard, it became that this is a token standard that the Ethereum network created that makes it easy to program to issue tokens with a few lines of code. It was probably because of that the Colored Coins and Mastercoins initiatives didn't have traction anymore. But this idea of managing other tokens than currency tokens with a public blockchain infrastructure is quite old. It's nothing new. And this NFT hype that we have at the moment, people saying like NFTs, they're focusing very much on the art world, because we've had some very popular cases right now. But really, any token that has more properties than an ERC20 token or a Bitcoin token, right? More properties than unit of value is basically a non-fungible token. Or a token that has more properties, and sometimes they can be have limited or fungibility, or be completely non-fungible. Yes, completely unique. Yeah.
Okay, before we get into the what did you want to? Okay, before we get into
are so many things to say. I'm sorry. I kind of lose track of what I said and what I didn't say.
Yeah. Is there something that you wanted to add?
No, I think tokens are basically a rights management tool. We can use them to represent any kind of property right, access right, management right, or voting right, right? And depending on how we program these tokens. And tokens with simple behavior would be money tokens, currency tokens like Bitcoin or Ethereum or Tether, or a central bank digital currency. It's the new thing, right? Central banks issuing their own tokens that are settled on a distributed ledger. These are very simple tokens. But we can add properties to these tokens so they can represent unique assets like a piece of real estate. And real estate, like an apartment with 50 square meters, is unique and different to an apartment with 80 square meters. And even two apartments with 50 square meters are different if they're one in the first floor to the if it is on the third floor. So these unique properties of location, of size, amount of rooms, whatever, make kind of the digital representation of a piece of real estate. You need more properties to add to that token, right? And we could use tokens to represent art. We could use tokens to manage access rights for the sharing economy, et cetera, et cetera. We could use tokens to and allow us to vote for national elections, but or for how the DAOs or the Bitcoin network should be upgraded, right? And tokens can combine all these functions of being an asset, but also allowing you to vote in the network. And we see that in the Bitcoin network, in the Ethereum network, they don't only represent assets, but they also represent voting rights when the Bitcoin token can represent or certain tokens can represent voting rights when it comes to hard forks, for example. Yeah.
Mm-hmm. So, but for a layperson, I can imagine a token is basically, yes, my access right to a property or some kind of good or a currency or whatever, a value, and I as a
can
user
be a value. Mm-hmm. It doesn't have to be. A token is basically, tokens can also only represent voting rights. They can be tied to your identity. So, and thank you for this, because I think the current media is focusing on, and even in the crypto world, we're focusing too much on asset tokens, whether they're money, represent something like money, or some non-fungible token with more unique properties like is being hyped right now. But tokens can really be used for complex voting rights, access rights management. And for that, we need identity systems. And so I think what we also need to talk about is that through the backdoor of creating peer-to-peer electronic cash, the Bitcoin network not only created a giant settlement machine, this blockchain network, but it, in order to have a trustful kind of settlement of tokens, they needed an identity system based on public-private key cryptography. And but the type of identification in the Bitcoin network is based on anonymity, right? If we have decentralized identities that can be tied to real-world people, we can use the Web3 for creating much more complex access right tokens and voting tokens, identifying ourselves without needing to have our data managed by companies like Facebook or our institutions, where we're really kind of the owners of our data, or the sovereigns of our data. So there's this whole self-sovereign identity movement in the Web3. And once we have, there are many standards being developed right now based on decentralized identifiers, DIDs, but also other standards like Carry, that's based on gossip protocols, where people are trying to come up with standards that would be useful to have tokens that are tied to identities, kind of attribute tokens, like certificates. For example, COVID certificate, a university certificate that is tied to my identity can be tokenized. A driver's license can be tokenized without a national authority managing my data. Everything is managed by my wallet, and it's settled by public infrastructure like a blockchain network and other Web3 protocols.
But everything is open, so it's an open blockchain network and not a closed one.
It depends on the so we can build tokens. It depends on who builds the token, on what kind of infrastructure. So I'm a big fan of Bitcoin because it really opened this world, this new world, this new way of collectively managing data, and to incentivize people who contribute to keep the network safe. And this really opened a door to a completely new world, a completely new type of internet. But today we have not only the Bitcoin network, which is has been very stable and very reliable for so many years, but we have other blockchain networks or other distributed ledgers that are maybe not blockchain networks. Some of them are public, others are private. You can create tokens on any type of these networks. So I think when we talk about this new token economy, very often we mix the application layer with the settlement layer, with the infrastructure. So if you decide to design a token, an access right token or an asset token, you can do that on the Ethereum network, but do that also on the Bitcoin private distributed ledger. The question is a question of philosophy, probably. Which type of network do you prefer? Do you want to use? But sometimes it could also be a pragmatic question of regulation. In certain industries, certain use cases are highly regulated that might prohibit you using public infrastructure. Or you might want to use a public infrastructure to get more traction, right? But the question of, or depending on the type of use case, if you need more transaction throughput, etc., you might prefer one blockchain network to the other or one distributed ledger to the other. But in general, the question of how to design, like what type of token you want to create and how to design this is not necessarily related to which blockchain network you use for the settlement of these tokens. Yeah.
So now you spoke about Ethereum before, that it was the first blockchain that enabled smart contracts and the issuing of tokens. But now there are many more of that kind. Which are the most interesting from your perspective? I mean, I just heard, I read from Polkadot and Cardano. What are the differences in between those? Because I know the difference to Bitcoin, the Bitcoin blockchain, but not what are the differences there? Okay,
this is a tricky question because now we're getting into crypto politics, and crypto religion a little bit. I wouldn't. So the blockchain networks that are public and have smart contract capabilities, you're right. There are over the last 4 or 5 years, many others have emerged. Cardano, but before many others that try to be more scalable, that try to be maybe also have better governance or other types of governance rules. I mean, especially after the DAO hack in 2016 and the hard fork, this community saw that governance actually is an issue, and I forgot the name. I shouldn't. There was there is this blockchain network that tried to have better governance tools, but then they raised a lot of money, and then they actually had other issues. Tezos, yeah. So Tezos is definitely a good. They had some good value proposition, but then they have some management issues, let's say. Cardano claims to have the better technology. It escapes my mind why the claim is valid, but I must say that I haven't spent enough time to dedicate study of that. Polkadot is a bit different because they started out with an blockchain kind of interoperability protocol and doing much more things now. I do think that even though there are many other standards and blockchain networks out there, still Ethereum has the biggest traction. Probably because at the moment, because they were early adopter, they're the first movers in the space, and they started to build a big developer community, but also because they started to go corporate quite fast. So having the corporate kind of version or blockchain Ethereum solutions, it's hard for me to say. I think my focus, I'm probably the wrong person to ask this question because I'm not a blockchain infrastructure specialist. My focus is more on what can we do in this token economy and the design, the types, identifying token use cases. And my focus is on the type of purpose-driven token that steer networks, that allow you to create collective infrastructure by incentivizing the individual. And I try to identify the economic mechanisms that would be necessary to incentivize kind of collective action towards a specific purpose, whether it's because designing, you could use tokens to steer social media networks, like Steemit. Steemit is a decentralized social media network that has its own blockchain system, and it incentivizes posting of content in the social media network and the curation of content in the social media network. And in my work, I focus on how to properly design these kind of incentive tokens so
is Steemit,
yes.
Is Steemit still a thing?
Steemit is, I don't think, a thing anymore, but we don't have much better alternatives. Steemit stopped being a thing. And this is exactly why I'm doing what I'm doing, because Steemit had a very good idea. They said, social media should be collectively managed, but the data is owned by the companies like Facebook and Twitter, who kind of provide the platforms for social media. So what Steemit tried to do a few years ago, 6 years ago, when they started, they created their own blockchain infrastructure because back then Ethereum didn't still exist. So they created their own, a very scalable blockchain infrastructure. And then they created this decentralized application on top of the Steemit blockchain network called the Steem blockchain network called Steemit. And then they had 3 different types of token. They had the blockchain token, then they had the application token, and then they had the stable token, because back then there were the concept of stable tokens didn't exist yet. But their main token, their reputation token in the network, Steem Power, was poorly designed. And even though they were the first movers and they had more than 1 million active users at the peak, and I personally know people who use Steemit and posted a lot on Steemit, and they could pay part of their rent or their whole rent with the income they had with Steem tokens. But Steemit had a design flaw, because the token, the reputation token that you could earn when you posted good content and when you curated good content was not tied to your identity. You could buy it and sell it on the market. And the design of the token was the provision that Like if you have more Steam power, the reputation token, and you like somebody's post, that person will get more tokens because you have more power in the network, right? But because you could buy the reputation tokens with outside money, and you could buy and sell your reputation, and you could delegate it to trading bots, right? Who would then develop algorithms to optimize powering, like liking of content, not based on real quality, but based on income optimization. This created a lot of inequalities in the system, where the like a few users in the system had like less than 10%, had more than 90% of the tokens, and late adopters to the system had no chance of making any real money anymore. And then because of other things that happened in the network, that's too complex to deep dive into, but I described it actually in my book. There's a whole chapter on Steemit for those who would like to read it. And there was this kind of fork of the Steemit network for political reasons. So there was a secession, and some core developers and users and miners forked into the Hive network. So yeah, Steemit is not really a thing anymore, but what they try to do is a thing. So the question we have to ask ourselves is like, okay, their value proposition, that's valid, but how do we need to design a social media token in a meaningful way so that it's persistent and sustainable, that people are incentivized long-term to contribute with valuable content and valuable curation to the network? That they didn't resolve, but they started the whole thing, and for that they merit the credit. Yeah.
Yeah, my feeling is that we are so early that all those projects are basically learning by doing. So we learn from their failures. Yeah. So that's what's innovation.
So
yeah.
But that's exactly. So this is the natural innovation cycle. So I like to talk about Steemit, not because I think it's a best practice, and all, it's already a kind of, I think, a dead project. Not really dead, but yeah, it's not like it lost momentum big time, let's say, to be very neutral. But I like to talk about Steemit because it's a very good use case of what we can do, like a very good use case for this future tokenized economy, a very good use case to understand how social networks can be DAOs, right? And can be collectively managed, not by Silicon Valley companies, but by a network of independent actors. And when a company tries to take over, and because this is what happened actually before the secession, why did the Steemit network split into Hive? Because the original founders sold their company, and their company had the founding tokens, and they were dormant. But in theory, you could use the founding tokens to for voting. They were governance tokens also. So when the new people, the new investors took over and bought this company, Steemit Inc., with all these founding tokens, they were referred to as ninja tokens within the network. All of a sudden, the stakeholders in the network, from the miners to the users, they were scared that the new owners, because they were running this whole thing like a Web2 startup, right? They would use their founding tokens to run a centralized government of the Steemit network. And this is when the secession happened. This is why they forked. So if you look at this, and this happened exactly a year ago, so I think Steemit is very interesting use case for two reasons. A, for poor token design. So it was already kind of losing traction before the secession. But when the founders sold their initial tokens, or the company with the initial tokens, you saw the whole governance issues in decentralized networks. You can't run a decentralized network like a centralized company. And if you try to do that, or if people assume that you will try to do that, as was the case with the before the hard fork, Steemit hard, the what was it, Hive hard fork. People assumed that this new owner would run a centralized government because of things he had been saying on social media, and to avoid this, they forked and they split away. And when you split a network, it becomes less powerful. Yeah. So so secession is the thing in the decentralized kind of web. You can in public networks and open source networks, you can create your own chain anytime. You can split away, but you need to understand that when you do that, even if a lot of like 50% of the network joins you, you're still only 50% of the network, right? So, and this opens a lot of very interesting questions around governance, crypto governance, or like, and in the end, we do need to deal with politics also in crypto. Like blockchain networks are only a technology that allow us to do things in a different way and to maybe cut down on some bureaucracy, but it will not eliminate the need of people with different needs trying to come to the, reach common ground of in which direction they want to run. And then it's always politics. Yeah. And we see politics in the Bitcoin network, we see politics between the networks, and we see politics in the Steemit network. There's politics all over. So trying to have trustless trust and let the code do everything, no, it's never going to happen.
Yeah, it won't work, I guess. And
no.
I mean, I guess we all also need a kind of like politics around how we don't develop the decentralized web as a surveillance machine. I mean, because
yes,
yeah.
Yeah, that's also a very good point. But we already have many Bitcoin forks, and including Bitcoin, the Bitcoin network, that are looking into alternative, or that are using alternative cryptographic tools to have more privacy by design. Monero was one of the first, if not the first, networks. Zcash and many other networks that are using, alternative cryptographic tools that allow us to have obfuscated transactions, or obfuscate the transaction data, or have some level of privacy by design. So we're still figuring these things out. But this is not a token question, right? So as we're oscillating here between, I mean, it is also a token question, because for certain, what we need to learn is that there is no full privacy and full transparency. Both have downsides, right? For example, let's go back to the Steemit example, right? Because I like the Steemit example because it's not a cryptocurrency example. It's a social media network. Everybody understands that, right? So great. We had these people who said, let's create a type of Facebook Reddit that is run by public infrastructure, so nobody owns our data. But what happened is, because of the type of cryptography that that the Steem network used, it was similar, if not the same, to the Bitcoin network. All the transactions were public. The good thing about that is that anyone can run big data on the transaction, on the public, like kind of the block explorer. The transaction data is available to everyone, so anyone can create big data applications. And they created cool applications based on the data on of the Steem blockchain, useful applications for the Steemit community. But the bad thing was that once it can be tied to your identity, now everything is visible to everyone, right? So the question definitely in future blockchain, social media blockchain-based social media applications. What type of privacy do we want? And we can resolve these things with using the right kind of cryptographic tools that allow us to have trust while also giving some privacy. This is happening, already. So, and it's a very important question.
You mentioned before that we can't use centralized solutions or ideas for decentralized systems. I heard a similar thing the last days about regulation of decentralized finance. And on the other hand, you hear, or we hear from the Bank of International Settlements and from the FATF that they want to crack down on us and track all transactions above $100 US.
This is not new. Yeah. They've been doing that in banking world. Yeah.
Yeah, exactly. And they want to do exact the same now in the crypto world. And how does this affect decentralized finance?
Yes, it will. Yes, governments are going to try to, or going not only to try, they're going to regulate. Because DeFi is also finance, and most people would say there are good reasons to regulate as investors' protection. If you see what is happening around these flash attacks, etc., I mean, people are being milked by savvy people in the system. So a regulation is going to happen. Decentralized doesn't mean that it's not going to be regulated. I don't even understand this logic. So, I don't like the word decentralized. Maybe we should start with this. The word decentralized is a very it's inflationary. It's been used in an inflationary way, and it's not even to the point. I think that very often when we use the word centralized, we want to say different things. So blockchain networks allow us to have sovereignty over our assets, right? So asset sovereignty is a better word than decentralized. So blockchain networks allow us to collectively manage a public infrastructure. So this is collective management. You can call it decentralization, but decentralization, it's an anti-word. We have centralization and we don't want to be decentralized anymore, but it's not specific, No. So what blockchain networks allow us to do is to have sovereignty over our assets, to collectively manage a public infrastructure like a peer-to-peer payment network, or a like Bitcoin, or peer-to-peer computing network like Ethereum, right? And not only collectively manage, but also co-govern these networks. So I can have a say in how the governance rules should be upgraded when there are code protocol improvement proposals. I can vote over, am I for it or am I against it? So it allows me to be part of it. So it allows to be democratic, have a say in how the system is going to develop. But yeah, decentralization, but it doesn't mean that governments are not going to try and regulate it. But obviously, if one government tries to regulate an international thing, they're always going to fail, because regulation is only going to be successful probably when there's enough on an international level. Otherwise, you can flee into different jurisdictions, right? But yeah, we will see more regulation of DeFi. I don't think necessarily it's a bad thing, because we also need more transparency. But regulation can be difficult, but all this KYC AML anyhow for me is difficult, because for me personally, from my point of view, this is now a personal political point of view. We've had like our privacies invaded through KYC and AML for decades now, and nobody's talking about that. In Europe and in America, we're quick to bash countries like China, that they have surveillance states, and nobody's talking about what is happening in Europe, in America, and through the backdoor of KYC AML requirements. So I have also a subchapter in my privacy tokens chapter in my book, if you're interested in that. So yeah, regulation will happen, but DeFi will persist. I think DeFi is also maybe not a word. It's not decentralized finance, it's Web3 finance. Mm-hmm. It's where I can use what somebody once referred to it as money Legos. I can fractionalize components and put them together like Legos. And I like the analogy of money Legos much more than the term DeFi. It just makes finance more flexible and on a theoretic level, more inclusive. Practically, it's only people who are very good at math and at coding, because the usability of these DeFi tools is not quite there yet. But in the long term, it can become more inclusive than the financial sector. Yeah, mm-hmm. But it will still be regulated. Yeah.
Yeah. And you also, in your book, you also speak about the fact that the real economy and financial markets will merge. So everything will become a crypto market. What do you mean by that? What's the idea behind of that?
Okay, so today if you have a class in economics, you learn that, we have the money markets, and then we have financial markets, and then we have the real economy, right? But now that we see that we can tokenize everything, like we can use a cryptographic token that is collectively managed, to represent something that is similar to money, but then we can also use it to something that is like an asset, a commodity, like oil, or, but we can use a token also to represent an asset that is very unique, like a piece of art or a specific real estate. And then we can fractionalize it. And now I can use fractional tokens instead of going to a bank to raise money, to get a credit to buy an apartment. I could, if regulators are on board and the regulatory framework is there, I could use, fractionalize parts of my apartment and issue co-ownership tokens. And with these smart contracts, these token contracts, pay co-owners partial rent, without allowing them, but they won't have voting rights over when to sell my apartment, because I want to live there, right? I don't want them to tell me when to move out, but they can invest into my apartment and get fractional rent for their fractional investment into my apartment, and I can settle this with tokens. And so as we're tokenizing everything in the real economy, what is the real economy and what is money? Because if I can, in the future, we're not, right now we don't have multi-token wallets yet, so many, but if in the future we have even better wallet usability and we can manage 300 different token types in our wallets, then it doesn't matter whether I pay my bill with Bitcoin or with Ether or with the US dollar token, or maybe an Apple token or an apartment token or a fractional Picasso, because the algorithm knows what it's worth. And the only thing I have to worry about is, what is my Verrechnungswährung, we say in German. It's like, what's my unit of account? Do I want to do my accounting in my head with euros or with Apple tokens? If I prefer to do my accounting with Apple tokens, I can do it. Nowadays people are doing more and more accounting in their head with Bitcoin or Ether, because more and more people are using Bitcoin and Ether for payments, or maybe not so much Bitcoin and Ether, but the stable coins like DAI, Well, I know more and more people who are using DAI and more things that are starting to be denominated in DAI or other stable tokens. So yes, and so what is the difference between money and an asset, right? And so I think this is why I said that in the future, the concept of money, finance, and the real economy will merge, because anything that is transferable and not tied, any token that is transferable and not tied to my identity can become money. So we like a fractional Picasso token. If it's not, if I can transfer it and trade it on the money, I can use it like money. And this is what we call bankable funds. It's not money, but I can liquidate it quite easily in a bank for money. But the future of banks is wallets. It's Web3 wallets. So if I have all these asset tokens in my Web3 wallet, everything is money. So we will enter this digital barter economy, where it doesn't matter which type of tokens I use for my payment. Yeah.
What is the time frame? What do you think? When are we going to enter that time?
We have, and I think that was one of your questions you sent me, and I think this is a good ending, right, for probably this interview. So this is what I'm saying is quite. It's obviously we're not there yet, but we're not too far away either. It depends. We have a few hurdles. One is wallet usability. Wallets are still need much better usability. They're getting better, like from management of your private keys to multi-token capability, but we're not there yet, not by far. Regulation is another bottleneck. We have countries like the USA saying like non-custodial wallets. Like, what is this? They are trying to crack down on so-called non-custodial wallets. That's the whole point we created Bitcoin, to have self-hosted, assets. And now they're calling it non-custodial because they want to go, because I assume they see the danger in people being autonomous in their asset management, right? I mean, it's also dangerous because many people are losing money, because of the poor private key, solutions. But there might be other motivations behind that kind of legislation. So legislation is a bottleneck. Wallet usability is a bottleneck. Legislation not only of wallets, but also of the use case of fractional ownership tokens of real estate is possible already today from a technical perspective, but not from a regulatory perspective. And it's not possible either from a network effects perspective, because in order to have that, you need everyone along the value chain in the real estate industry to be, running their systems on distributed ledgers and having wallets that are regulatory compliant, blah blah blah. So it's still a legal and network effect question. But once we're there, and it depends on the type of industry, I think 5-6 years, that will be a very interesting time. One of the big, I think, accelerators of this token economy will be central bank digital currencies. So central banks today are looking into tokenizing their centralized currencies, their central bank currencies. So it would be kind of, China already has the digital renminbi, yeah, and even the Eurozone is looking into a CBDC, and Lagarde said that within 5 years, we will have a central bank digital currency. So I don't understand the level of bureaucracy. So 5 years, okay, 5 years is, I have to laugh at this innovation cycle. But if you think once countries have a central bank digital currency, what does that mean? Everyone has a Web3 wallet. And once everyone has a Web3 wallet, the infrastructure is there to not only manage CBDCs, but also trade other types of tokens in your wallet, right? This is why central banks were freaking out when 2 years ago, Facebook and the consortium around Facebook announced Libra, because they wanted to create the Calibra wallet with which you could create, not only manage the Libra token, which was supposed to be a stable token, right? But I mean, they would have become the world's biggest bank. Okay, so another aspect is the fact that we have central bank digital currencies. More and more governments are looking into tokenizing their central bank money. And this is referred to as central bank digital currency, which would basically be another type of central bank money next to cash, bank money, and other types of long-term bank money. And so it would be the tokenized version of a dollar or a euro or a renminbi. That would be settled by some type of distributed ledger, most likely not a public blockchain network, but distributed ledger that is settled by different government nodes or government entities or semi-private entities or semi-public entities. But I think that once we have more and more governments actually implementing a tokenized version of their currencies, these governments also need to issue wallets or wallet software where you can have identity-based systems that identify you, or where you can actually manage your money. And this could be interesting if a government opens this kind of wallet infrastructure to settling other token types. This could spur the token economy. However, I think that some governments might choose to try to prohibit settling other tokens. This will be an interesting thing to see how they implement their CBDCs and with which wallet you will settle it. But yeah, I think this will spur the token economy in general.
Mm-hmm. And which countries do you think will be the next to have a CBDC after China?
There is it's hard to say, right? I don't know. I haven't been too much focusing on CBDCs lately. So I think I'm probably not the best person to ask, but what I can say is that there is a website. Somebody or a group of people or institutions created a website called cbdctracker.org. And it's like it's an online tool with which you can see which countries are at which stage of thinking about or implementing central bank digital currencies. And it's a color-coded world map, which you can click on, and then you have more information. So if you're interested in that topic, look at what the IMF, the World Bank, but the Bank for International Settlement has written about that. Also, the ECB has many papers, and have a look at this CBDC tracker. There you will get much more information.
Okay, thank you. And Shermin, thank you very much for this interesting talk about tokens and token economy. Can you tell us, please, where people can find you and follow your work if they want to know more about your work?
Okay, yeah. So if you want to follow me, my name, you can follow me on any social media, Twitter, LinkedIn. If you want to follow me personally on Medium, so just enter my name, you will find me. I regularly publish stuff on Medium. I pre-publish a lot of the things, even of my next book. Currently working on my next book, and I pre-publish a lot of the chapters of my next book already now. And yeah, you can keep in touch over these 3 channels.
Okay, great. Thank you very much. It was a pleasure to have you again on my show, and have a good day.
Thank you. Thank you for inviting me, and yeah, looking forward to the next time maybe. Yeah. Have a nice day.
You too.
Ciao.
Bye.
Bye.
Thanks so much for joining the Anita Posch Show today to learn more about Bitcoin. You can find the show notes for this conversation on anita.link/show. If you want to get the best stories in Bitcoin from my point of view in your mailbox, go to anita.link/weekly and subscribe. And if you have a question or just want to send me some feedback, drop me a line at hello@anitaposch.com. See you next week when it's time for the Anita Posch Show. Music start with yes, delicate beats. Content, idea and production, Anita Posch.